Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined to you today with no camera because I'm having certain technical issues, but joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. And we have a
And we
guest.
have a guest.
Yeah, I want to introduce everybody. This is my summer extension intern, Lauren Keller, and I'll have her introduce herself. But she is here just for the summer months, so June and July, learning about extension and the work we do here at the University of Missouri. So, Lauren, you want to introduce yourself?
Yeah, absolutely. Hi, everyone. My name's Lauren Keller. And like Ben stated, I am interning here with the Ag Econ department for the summer. I am originally from Shelbyville, Missouri, up in the northeast corner of the state. And I am majoring in ag education, leadership, and communications here at Mizzou, along with a minor in hospitality management. And I'm really excited to be with the department for the summer and learn as much as I can about extension and the wonderful world of Ag Econ.
Yeah. If we're
So,
not careful, Will, she's going to replace me.
yeah, exactly. And Lauren, I just have to ask, with you being from the eastern half of the state, the Cardinals are much better than the Royals, correct?
Yes, 100%.
Good, good.
I don't know if
Yeah,
either of
at
them
this
are.
point, not sure. Yeah.
Different flavors of bad right now, I guess you could say.
I'm not sure either one's worthy of our fandom this year.
Well, Ben, we've had a lot of factors to talk about coming out of the last week with WASD report, and then some stuff coming up this week with it being Fed week once again. But before we dive into the topics today, let me give a quick rundown on the week's price changes. So we saw July corn up 20 cents in the week at 6.17. December 23 corn up 12 cents at 5.49. July soybeans up 22 cents at 13.72. November 2023 soybeans up 30 cents at 12.09. We did see soybean oil up nearly 5 cents at 53.98 cents per pound. Soybean meal per short ton was down $3.80 at 397.40. July wheat for 2023 up 9 cents at 633. And July wheat for 2024 up 4 cents at 690. And then that crude oil for July up $4.86 at six, or excuse me, down $4.86 at 67.23. So Ben, so some light gains when you look at grains and oil seeds, and then once we see that crude oil market dropping just a little bit, what really did you see as the key highlights coming into this week?
Sure. So weather kind of spooked the market at the end of last week again, then tapering a little bit with the expectation that we could see widespread rainfall across the entire Corn Belt, or at least the entire southern Corn Belt. Those rains came, but were largely disappointing to the markets. And I think I would sit here and say that that was probably setting up for a disappointment regardless. Well, I shouldn't say regardless. If we had gotten lots of rain across the entire Corn Belt and an inch or more, that would have certainly helped the markets. But I think the reason I say that I anticipated this, small disappointment, or this disappointment, was the fact that we were so dry across a big swath of the Corn Belt, and it's going to take multiple, rain showers or rain events like what we saw this last weekend to really kind of pull us out of that and kind of change the market attitude. We still could have that, and the weather pattern certainly suggests that, but a rally in prices on Monday as we kind of came out of that rain event.
Well, and I'm kind of curious, while this could be a very short, lived event, when you look at all the smoke that's covering a lot of the United States right now coming down from Canada, I wonder if that's going to impact, the crop production just ever so slightly, depending on how long those conditions are sustained. I'm not an agronomist, so I really couldn't tell you exactly what that might mean, but maybe a little bit decreased sunlight, and I don't know how that impacts rain patterns at all, but you'd imagine that might have some play to it as well. But
Sure. Yeah.
but Ben, looking elsewhere, looking at the energy sector, you're seeing stocks going up across the board, and some adjustments there. Ethanol production going up as well. What is that really signaling to you right now?
Yeah. So many people probably noticed gasoline prices jumped last week. That was in relation to that news that OPEC Plus was going to limit production. I think that's now starting to work through its system. So I anticipate this next week of energy data, which would come out on Wednesday of this week, to be very telling, because that would now include some of, maybe these broader changes in terms of price across the entire country. When I think of energy, my message really hasn't changed, I think, much over the last couple of months. On the ethanol side, we remain below the levels needed to hit USDA's export or the use pace. I thought maybe we'd see a small revision in June. We did not. USDA left their target estimate for 2022-23 corn use for ethanol. That could change in the months ahead, though.
So Ben, I was thinking about leading you in and talking about some export and trade things, but we've really been hammering that the last several weeks, and I feel like not a lot has really changed on that front. But I'd really like to jump in and talk about general global supply and demand factors coming out of the June WASD that came out from USDA this past week. So we saw some cuts to exports there, corn dropping among other things. So what was your overall takeaway as you saw that report come out?
Well, so the bearish news kind of continues within USDA as they kind of tamper down, estimates. These are cuts that many traders have been calling for literally months, maybe 2 to 3 months at this point. And I always remind folks, USDA has a very methodical process. Like they have a very strict, outline for this, and so they respond when they see evidence and have the the clear cut direction to make those changes throughout the year. And so, well, I think many traders and many market observers would have said that these are adjustments that should have had months ago. USDA is continuing to adjust downward. My target for corn exports was always somewhere around 1.7 and a half billion bushels of corn exports. USDA the last 2 months has lowered corn exports a combined 125 million bushels over the last 2 months. So they are moving closer to our targets. And I sit here and just say it's not them being reactionary from the standpoint that it's maybe too slow like many people would anticipate.